and I know this from my many years at Jefferson National and trying to get the Orions and BlackDiamonds of the world to build insurance functionality, is they didn't have demand, right? I mean, their advisors aren't really using the products. A data feed would be enough. But as there's more and more demand for the products, the technology is necessary, but it's a little ahead of where the market's going to be. So our notion was, let's build the technology and embed it into platforms so we don't have to wait for the demand from the advisors. Let's build it ourselves and get it integrated into these platforms, because that's what everybody works from. And if you're going to truly make your services usable and accessible, they've got to be integrated.
David Lau has spent his career disrupting product distribution in the financial services industry. He set his sights on insurance 5 years ago when he founded DPL Financial Partners to build a technology platform that fee-based advisors can use to sell high-quality insurance products. I spoke to David about advisors who can leverage his platform to increase client wallet share, what his plans are for the $26 million in capital that DPL just raised, why he partnered with SS&C Advent to power their insurance exchange, and a whole lot more on this episode of the Wealth Tech Today podcast. Welcome to the Wealth Tech Today podcast. I'm your host, Craig Iskowitz, the founder and CEO of Ezra Group Consulting. We help wealth managers, asset managers, and wealth tech vendors make better business and technology decisions. This podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. Be sure to subscribe to the show wherever you listen to podcasts so you don't miss any future episodes. This episode is with David Lau, who is the CEO of DPL Financial Partners. And just a quick little bit of background, which we didn't get to talk about on the episode, but why I wanted to talk to David. My firm does a lot of work with broker-dealers, as we said earlier, banks, wealth managers, and a lot of fintech vendors. And the DPL Financial Partners has been coming up a lot more in conversation, especially with the insurance broker-dealers we work with, the larger firms that are getting involved in insurance, a lot of the fintech firms that are looking to bring insurance products or launch insurance exchanges, and DPL kept coming up. So I hadn't met David before we had this interview. So I thought it'd be a great opportunity to talk to him, find out a little bit more about his company and where they're going, and then share it all with you. So I hope you enjoy this episode. I would like to introduce my guest for this episode of the Wealth Tech Today podcast is David Lau, founder and CEO of DPL Financial Partners. Hey, David.
Good morning. How are you, Craig?
David, I'm doing fantastic. Thank you for asking. How are things in Louisville, Kentucky?
Terrific. There, I mean, in this world where there's so much turmoil, it's been really good for us, business wise, and things in general are good. I mean, Louisville, as you probably know, was in the news a lot more than Louisville likes to be in the news over the past year, but things seem to have settled down in all kinds of ways here. So all's good.
It is all good. I live in New Jersey. New Jersey gets into the news plenty, so I'm always happy when it's not in the news. But let's get this show on the road. Can you give us your 30-second elevator pitch for DPL?
Yeah, so I founded DPL a little over 5 years ago on the notion. I had been the chief operating officer at Jefferson National for a decade. I built that company from the ground up, and I've spent my career kind of disrupting distribution in financial services. I was the chief marketing officer of the first internet bank in the country, called Telebank. We built that and sold it to E-Trade. And so I've always built companies based on the notion of let's change distribution, because in financial services, distribution is often the biggest expense in the product. So you want to provide a better product for the end client. The best way to do that is to lower distribution costs. In banking, it's pretty simple. You get rid of a branch and you get rid of a really expensive mechanism and part of the distribution. In insurance, it's the commission. So On one hand, there's this motivation to provide better product, better value to end clients, which really drives me. On the other hand, you also look at the world in financial services, and you see that insurance is really antiquated. In terms of still being commission driven distribution, the whole rest of financial services has moved on from that model. Whether it's wirehouse reps, broker dealer reps, everybody has moved to fee based except for insurance. Long ago, mutual funds, no load had become the standard. In the mutual fund world, the same needs to happen in insurance, and it will, because insurance has got to keep up with the advisor's business model.
Indeed, it does. And we've seen that a lot with our clients. Our insurance clients seem to be on a very strong path, moving their agents and advisors more onto the wealth space. Do you see this as a trend across your clients as well?
Yeah, I think it's a big trend, and it's part of the reason for building DPL. Again, being focused on the end client value and delivering better outcomes for clients. Apart from the pricing problems that commissions cause, they also cause conflicts of interest. Whether it's for a commission salesperson who's motivated to sell the most amount of a policy that they possibly can, or for a fiduciary who traditionally hasn't been able to get paid on products that might be really beneficial for their clients. So when you eliminate the commission, you can take that commission salesperson out of the equation, and you let products be implemented by fiduciaries. So that's, to me, again, an important component of delivering great value to the end consumer. You get lower priced commission free products implemented by a fiduciary, and that's obviously a far better formula than expensive complex products implemented by a salesperson.
I would agree with that. I know I read a study where it said that even with insurance, even with the presentations or the descriptions, the diagrams of how the insurance works, experienced insurance agents still don't understand their own products.
Oh, and products are incredibly complex, and they don't need to be. And that's part of what we do is we work with carriers to bring products to market. You want to keep them relatively simple, so that people understand them and know how to use them, not understand how to sell them, which is where the commission market has evolved to over the decades. It's how do you differentiate in the commission world? Well, you've got to have a good sales story, right, from the product manufacturer point of view. So you come up with a rider or a feature of the product that sounds compelling on a sales story. And that's the way the industry had evolved. When and it's really unfortunate, because the industry winds up doing itself no favors when these are really good products. An annuity is a great product at its heart. So let's get back to what the heart of the product is. Cut out the expense and the commission and the complexity, and at the heart of it, you've got a risk pooling product that provides tax deferred accumulation, whether on a variable or a fixed basis, and then lifetime income. That's a really useful product, for a financial advisor and a client, obviously.
Both, yeah, it should be mainly beneficial for the client, and it's
Yes.
annuities always have had a bad rap over the years, but we're seeing more and
Yes.
more carriers offer different annuities, and also more tech platforms build in the ability for advisors to do planning with annuities. How is DPL helping out in that area?
In many different ways. So let me address the first part of that question first. When you say annuities have developed a bad rap, well, number one, we do more than annuities. We'll get to that. But in the annuities have developed a bad rap, and when you understand what's at the heart of those things, all the issues that you'll bring up about annuities, those are all driven by commission, right? So it's bad sales practices. You read about overly aggressive sales practices, or products being sold inappropriately to an 85-year-old widow, or whatever it might be. Expense, driven by, that's driven by commission. Those bad sales behaviors driven by commission. Long surrender periods, meaning lockups. Why is that? Because of the commission, and the carriers got to recoup the commission they paid out to the commissioned rep. So all of those things that people don't like about annuities, they're all driven by the commission. So that's a great start for us, right? Let's get rid of the commission. So that's going to help things tremendously. And then additionally, in insurance, outside of a select few products, maybe like term life, it's hard to compare. Or where do you price shop an annuity? Other than like a single premium immediate annuity, which is super easy, right? Let's see what the rate is. But how do you compare and price shop one annuity to another to try to find the best product? Nobody talks about that, right? So we've developed technology that enables you to do that, right? So as an advisor or as a client, you can look at our tools and our calculators and say, okay, I want a guaranteed income stream. I need $5,000 a month or whatever the number is. We can help you find the product that will do that for the least amount of money, right? And depending on your preferences and your risk tolerances and things like that, we'll help you find the best product across all kinds of carriers and all kinds of product types, which is again something that's really needed in the insurance space. There's a million ways to compare mutual funds and tools to do that and things like that. Again, why couldn't you do that with insurance? And that is part of what we're doing on the technology side, is bringing that capability to the market that enables people to find really good products.
That's really interesting. That's what's one of the things what I really like about your company and what you're doing. And we'd start talking earlier before we were recording about how your company comes up in a lot of our work with insurance carriers and doing research on the market for insurance. So I think that whole move, and I think you pioneered that at Jefferson National, the move to away from commissions and to be able to
Yes.
fit the fit insurance products into a fee-based environment. And we've seen this for a while, that RIAs need to be more holistic and offer more than just investment products, because you're missing out on more than half of what clients need in their financial lives. Can you talk about how DPL is making RIAs more holistic in the sense that they can now provide insurance?
Yeah, absolutely. So, I mean, I've focused on the RA market for 17 years now, going back to my time at Jefferson National. And the reason I have is because, I personally align with the fiduciary ethic. I want to deliver, good product, good value to end clients. I care about people getting a good deal, that's, and not being ripped off.
That's crazy.
And,
How can you do that? That's not
I,
normal for insurance.
I know, so the RA market very much aligned with me personally, and the fiduciary ethic of the market. I think was great. But over time, the RIA industry has evolved. I mean, 17 years ago when I got into it, RIAs were primarily asset managers, portfolio managers. They managed assets. The market has evolved tremendously since then, so that RIAs are now financial planners and wealth managers and providing more holistic services, because for a lot of reasons. I mean, it's a natural extension, right, of and growth of a business and an industry, to go from just one segment of your client's financial life to expanding. And so insurance is also a natural expansion of what's going on now. When you're creating a financial plan as an RIA for your client, that includes insurance, right? It includes, we've talked about annuities, but it includes annuities, life insurance, long-term care, disability. Those are all addressed through a financial plan. And now if you're an RIA and you're writing basically a prescription for your client for these insurance needs, and you can't fulfill them on your own, that's terrible business. I mean, you've got to send them to a competitor, or let them go find, insurance on their own. It's not a great experience for the client, particularly when they can get what you're offering from other people who can provide that. We were also talking, before we started recording, about how insurance providers are now wealth managers. Your average New York life agent is just selling life insurance anymore. They're selling
Mhm.
holistic planning and wealth management. So as an RIA, you really need to incorporate insurance, one, to be protective and defensive of your clients, and keeping competitors away, but also just that natural growth and extension of your business. It's a very, again, logical and natural thing to be doing. And it's, you know, frankly, kind of precarious not to be at this point. And again, for me, I love to see it because, I want, these are important products. I mean, you can't, through investing alone, you cannot deliver for your client, this, guaranteed lifetime income. You can't protect their income during their accumulation years like you do with life insurance. I mean, you can't do these things. You need the tools. Your clients need the solutions. So, let's bring them about to the market in a low cost fiduciary way. And I think that's good for everybody except for the traditional commission salesperson.
Exactly. You made a great point when you said RIAs should be protective of their clients. And I think it's
Yes,
something that a lot of RIAs don't necessarily think about. They think once they have a client, okay, now I can move on and get more clients. They don't really think about how do I protect the clients I have, because they're the ones who are going to help them grow. You have to have a base you have to maintain. You don't want to have a lot of churn of existing clients who are leaving because you don't provide all the things that they need.
that's right. And also, so we hear that in a couple different ways of protecting clients. Number one is, from a fiduciary standpoint, many of the advisors, and we work with over 1,100 RIA firms, already in the 2.5 years we've been out in market. Um, Many of them from a fiduciary standpoint say, as a fiduciary, I'm defining these insurance needs. I should make sure my clients get these products, right? So if I just tell them they need them and then let them go do it on their own, that's, I'm not really looking after their best interest. If I say you need life insurance, I should make sure you get it. If
Mhm.
I say you need disability because it's a smart thing to do because you're a doctor, I should make sure you get the insurance. So I mean, that's one point of view. And the other is, again, business 101. When you think about growing your business, what are the first things you want to do? You want to protect that client base. You don't want to lose clients, but you also want to get more wallet share from your existing clients. It's far easier to grow your business by getting more business from your existing clients than to go find new ones. So insurance, represents about 20% of a client's investable assets. You're leaving 20%. If you're an RIA and not addressing insurance, besides all those other reasons, you're leaving 20% of wallet share, off the table, and inviting another advisor, into your client's life.
I had never heard that statistic. That's a really powerful number. Insurance is 20% of many clients' investable assets. Is that an average number across mass affluent clients?
That's an average number between permanent life insurance, cash-based policies, permanent life, and annuities, represent on average. I mean, the permanent life insurance market is an $18 trillion market. The annuity market is about a $4 trillion market. The RIA market is about a $3 trillion market. So when you think about your clients' assets, if you don't think or you're unaware that they own annuities, it's pretty likely that they do. I mean, the annuity market is bigger than the RIA market. So, we often hear from RIAs, again, that we work with, my clients don't own annuities. I know they don't. It's like, you know what, they do. You ask them. And sometimes a client won't tell you because they bought it from their brother-in-law, or they just don't think that that's something that, as an RIA, that would be within your purview. It's just, a product that they had purchased at one point in their life. And but when they do ask, I mean, our firms, that we work with, they'll typically find, 30% or so of their clients will come back and say, hey, yeah, I do own an annuity. If you can take a look at it, that'd be terrific. um, so it's this huge market that RIAs have historically just, you know, turned a very cold shoulder to, because, as we were saying, it's been, ugly in some ways, the annuity market. But it's again, an important product. Academics love the product. Well, they've got checkered reputation. They don't among academics. Academics universally love, very, not variable annuities, but just annuities in general, um, for generating retirement income. So, but RIAs, and I think because they haven't been able to, to use them because they've been commission driven and not no load, have shunned annuities forever.
Hey, I want to take a break from this episode to talk about one of my favorite charities, the Invest in Others Charitable Foundation. Invest in Others is a nonprofit that supports and empowers financial advisors who give back to their communities with overwhelming generosity. Now in its 15th year, Invest in Others has raised and distributed millions of dollars to worthy charities that are run by or assisted by financial advisors both in the U.S. and abroad. The Invest in Others Foundation is kicking off 2021 with a Restock the Shelves campaign. This past year, demand for food from nonprofits was at an all-time high. Last year, more than 50 million people experienced food insecurity. Now that the holiday season has ended, supplies at many food banks and shelters have dropped, but demand has not. To help restock the shelves, Invest in Others will award grants of up to $20,000 to nonprofits who are fighting hunger in their communities. If you work in the financial services industry and also volunteer for a 501c3 nonprofit that's in need of food items, apply for a grant from the Invest in Others Foundation on its behalf. They want to help you restock the shelves in your community this January. Applications will be accepted now through Friday, February 5th at investinothers.org/grants. So if you want to put your 501c3 nonprofit's name in for a grant of up to $20,000, please go to investinothers.org/grants. I wanted to congratulate you on your recent capital raise. Congratulations. Big news for you
Thank you.
guys.
Absolutely. I mean, it's always, kind of amazing when you think about it, like that somebody gives you money, right? They're just going to give you money. I mean, you're giving up something, right? You're giving up part of the company and all of that. But I mean, it's an incredible honor, like for somebody to entrust you with a bunch of money. And we raised $26 million from, two terrific, investment firms, Eldridge and Atlas Merchant Capital, and so we're thrilled to bring them on. They're going to be hugely helpful, in helping grow the business, not just from the assets, but from their board participation and helping grow the business. But it's an incredible honor for somebody to entrust you with a bunch of capital, and based on effectively your promise to say, hey, here's what I'm going to go do. You give me the money. This is the vision. This is what we're going to go do. And for some people say, hey, we trust you and we believe in the vision. That's tremendous.
With your success in the last 2.5 years since you started selling your technology with over 1,000 RIAs, what's your goal for the next 2.5 years? Where do you see DPL going with your technology platform in the insurance market?
Well, we internally call our platform, it's DPL, and we're DPL Financial Partners. Our tech platform, which I don't know that we've officially dubbed it in the marketplace, but people just think of it through DPL. But internally, we call it DPL Everywhere, because that's the intention, that we have the technology everywhere. Because it's I again think it's necessary. It's hugely complex technology, because if knowing annuities and knowing insurance, right, incredibly complex products, all kinds of riders, all kinds of things. We've modeled every annuity ever sold, right? So you can compare any annuity ever sold to another. You can compare them against your goals. And basically we're bringing price shopping and price comparison to market, for advisors and clients and consumers. And so I think that capability really needs to be in as many places as it can be, for the benefit of the end consumer, again. Because one of the things that when you put it in context, sometimes I find myself helping connect dots for people, right? So because when you're really familiar with a topic, people might not, have the same level
Mhm.
of consideration, or just haven't looked at things in the same way that you have. But when you look at the expense of a traditional commission variable annuity, and many people understand that they're really expensive, but let's put it in context, right? A traditional variable annuity, it costs about 140 basis points just to own the product. The M&E charge is about 140 basis points. The investment options within it are pretty expensive, particularly relative today to today's indexing age. About 100 basis points average expense for the investments. Then you put a rider on top of that, for income or whatever. It's another 125 basis points, right? So you're up to like 365 basis points in expense on a variable annuity. Now, what does that mean, right? It's on a $200,000 policy. That's about $600 a month for life that you just signed up for. And you probably didn't do it knowingly, and you probably almost certainly didn't do it price shopping, right? So from my point of view, there needs to be some transparency, relative to those fees. There needs to be the ability, for the marketplace, whether it's, again, advisors, clients, to be able to understand, the value that they're getting from the product that they're purchasing. And, linking that all the way back to your question on the technology, and our technology helps you be able to do that. So I think it's really important technology.
Yeah, it sounds like it. Yeah, and we've written about and talked about other technologies and other platforms that are starting to do the same thing after basically decades of no transparency in the annuity market, the insurance market. It's like healthcare. There's no transparency in the pricing of healthcare. You just go and do it. You go to the doctor and you pay the bill. You don't really
Yes.
know what the best price is. And similar with insurance, it's been very opaque. You guys recently partnered with SS&C and Black Diamonds
Yes.
on the
Yes.
Advent Insurance Marketplace. Advent Insurance Marketplace powered by DPL.
That's
Can you
right.
talk about why you did that and how that works? And we're big proponents of these marketplaces because we feel that they will do what you just said, help provide transparency and help enable advisors and their clients to price shop. How does the SS&C
Yes.
Advent Insurance Marketplace differ now that it's powered by DPL?
Yeah. So if it's a new creation, through the, combination of the two firms, SS&C Advent and DPL. So it'll be a new offering. But if you step back, kind of to the, to the vision of what we're trying to do, at DPL, and that is, let's create a no load, commission free, low cost insurance marketplace. That's where we start. Right. So we work with carriers to bring products to market, to help design, products that are, driven by consumer value. And then, how do you bring them to market? We do it through, through the marketplace. And again, like we were talking about earlier, we're trying to create a market, not be the market. So we want to create this commission-free market, of products available to anyone. I mean, we believe we'll execute well enough, we'll get our fair share. It's a plenty big enough market. We don't have to be, selfish about it. Let's bring product to market and let's make them available across the board. Only on a few products where we think we really, put some, intellectual capital into differentiation do we, look for any kind of exclusivity relative to a product. But the next thing is you have to make the products accessible. And in order to be accessible, you kind of have to be quote unquote on platform, right? If a mutual fund is not available through, Charles Schwab, and you're a Schwab advisor, you're not going to use the fund. It's
Mhm.
extremely difficult, right? So it's the same thing now with insurance. Let's get insurance accessible, through your desktop, as an RIA. And so, leveraging, our capabilities and the technology we've built, let's embed it into, different RIA platforms. And if you look at it from the platform's point of view, and I know this from my many years at Jefferson National and trying to get, the Orions and BlackDiamonds of the world to, build insurance functionality, they didn't have demand, right? I mean, their clients aren't, their advisors aren't really using the products. A data feed would be enough. But as there's more and more demand for the products, the technology is necessary. but it's a little, it's a little ahead of, where the market's going to be. So our notion was, let's build the technology and embed it into platforms, so we don't have to be, we don't have to wait for the, for the demand to uprise from, from the advisors for the technology companies to build it. Let's build it ourselves and get it, get it integrated into these platforms, because as you're saying, everybody, that's what everybody works from. And if you're going to truly make your services usable and accessible, they've got to be integrated.
And they have to be everywhere, like DPL
Yes,
everywhere. They have to be at the
that's right.
advisor's fingertips.
Yes. Yeah, we set low goals for ourselves, right? Trying to be everywhere. Yep.
Right, but are you guys exclusive with SS&C? So, or is that the only partner you're going to have with these types of insurance marketplaces?
No, it's, the implementation will have its, differences, and some some things that will be designed, because we're basically enabling our technology to be utilized, by SS&C, and through Black Diamond. So there'll be a particular implementation of it, um, through them, which will be, differentiated and unique. But our intention again is to make the technology accessible to RIAs no matter what platform they use. So that's the goal, and that's what we'll anticipate continuing to roll out here in 2021.
You like the Intel inside.
You got it.
Mm.
And again, that'd be fantastic, right? If you ultimately got to that place where you're the Intel inside. The other part though that we do is, we combine the technology with human beings. So for, again, you're looking at RIAs who have historically not used these products, whether it's again, life insurance, disability, annuities, not big users, familiar with why you'd use them, right? And conceptually, like, why you need them within a financial plan and the benefits they're going to bring, but not necessarily the product expert, on what's a good annuity versus a poor annuity. Price is obviously one thing, but how does some of these riders work? How does all this work? And you need some support for that. So internally, at DPL, we've got about 40 consultants who work with the 1,100 firms and growing that that we support. So not only do we provide you with technology, we provide you with the human support that you also need. And on top of that, many RIAs, because why would they be, haven't been insurance licensed in the past, because products were commission based. They couldn't use them. Why would you go get an insurance license? So we provide that licensing. We make it completely turnkey, for a firm who may not be providing insurance for their client today. They join DPL tomorrow. They've got complete insurance support from people to technology and expertise.
So you use the word turnkey, makes me perk up. So there's of course we all know of turnkey asset management platforms, or TAMPs. Is there a term for turnkey insurance platforms?
Yes, and I like to keep it to that. I mean, because it's kind of a new thing, right? So I mean, we've kind of pioneered it. So some people have said, "Oh, you're a TIMP, a turnkey insurance management platform." It's like, well, I guess so. If that helps you conceptualize what we
Better
do,
than a TIMP
I'm,
than a
I'm
WIMP. Don't make me a wealth
that's right. So it's
insurance
not it's
management
not the most
platform.
flattering acronym. Yeah, so
Yeah,
I tend to go to turnkey insurance platform, and just use tip,
a tip
but then you
or
start
a
getting into
platform
tips,
for
and
insurance technology would be a PIT.
oh, there you go. There's all kinds of terrible acronyms for what we do, I guess.
Well, I know we're running out of time. I just want to say, well, when I compare you to other firms, I won't have to name them, but you say you're the originals. How when you see people copying your model of enabling advisors who don't have insurance papers, that they can't sell insurance, that they're not licensed, that they can sell
Yep.
insurance through your platform, and other firms are copying it. How do you see that, and how do you guys stay ahead?
Yeah, I mean, one, I think it's good. I mean, just like at, Telebank, when we were building, the first internet bank in the country, as we're continuing to grow, people always ask, do you care about this competitor, that competitor, or Bank One just got into the business, are you worried? And it's like, no, because what we're doing is a very big idea, right? Taking insurance from being commission driven to fee driven, like that's not going to happen by one company making that happen, right? So we want to be the instigator, we want to drive the market, we want to make it happen, which we do through our ongoing work with insurance carriers, with the media. We do a lot of media events, with academics and the like, to drive media understanding of the products. So we want to drive the market and we want to help create the market, but we by no means need to be the market. The market is big enough that if you're trying to own the whole thing, you're only going to mess it up. So it's better for more people to be in it, more people to be served. And again, the ultimate goal is, let's deliver better outcomes for clients and make these products more accessible to clients, because clients need them, and they need them to be delivered through fiduciaries. So let's do that in as big a way as possible. And if that means other people are doing it as well, that's fine. We're comfortable with our execution, we're comfortable with what we do, and where we're going, that we'll be a market leader, and that you don't worry about other people imitating or coming in. If you do your job, you're going to be just fine.
And on that note, I'm going to wrap up this episode and our interview. Thanks, David, so much for being here. How can advisors who want more information about DPL get in touch with you?
Yeah, the best way is through the website, dplfp.com, DPL Financial Partners, that is, and give us a call, on the numbers on the website, 1-888-327-0049. So reach out. Again, we've got a staff of more than 40 agnostic consultants who do nothing but work with RIA firms to help them implement insurance. We're not just a phone number you call if you need us. We very actively engage with the firms we work with to help them understand, adopt, and educate on insurance, and help them serve the needs of their clients in a very active way.
That's fantastic, David. Thanks so much for being here.
Absolutely. Thanks for having me, Craig.
Hey, it's Craig again. That was everything I expected to be. I learned a lot about DPL, what they're doing, their capital raise. Very interesting, all their plans for that $26 million. I was really interested in David's views of the industry, the trends in insurance companies, how insurance is 20% of many people's assets, which I didn't realize are their investable assets. I didn't realize that. And I think that's definitely something advisors need to be concerned about and be mindful of. 30% of clients own annuities, and RIAs have historically ignored those. Another interesting fact. Also, the Advent insurance marketplace. I'm really interested to see how that shakes out. Can it rival what InvestNet has built? There's always room for another vendor, another player in the space, and InvestNet has staked their claim as the first vendor that had this in the wealth management space, at least integrated something with a large platform. Advent has now done the same. So I'm very interested to see how that shakes out, and really like David's attitude, where he's bringing his company, how he looks at the market. It seems I like people who have that kind of integrity, looking forward to delivering good products and selling at good prices to clients, and helping advisors deliver insurance and financial planning and holistic wealth management. As you said, DPL everywhere. So a reminder to go to our website, EzraGroupLLC.com, and subscribe to our newsletter. You will not be disappointed. We're also on LinkedIn, Twitter, and YouTube. So please remember to tune in next week for the next episode of the Wealth Tech Today podcast.